how closely tied, Quint, are the inflation data numbers, the Fed, and what happens to stocks?
Oh, I think it's one for one, Sully. I mean, ultimately, the Fed has to, I think, have a print that they can point to where the general public sees some sort of resolution to this inflation issue. I mean, if you're an investor or you're involved in the markets in any way, you're seeing the input prices fall off a cliff. I mean, we're basically seeing all of the leading indicators fall considerably, but I don't think that that gives the public any confidence whatsoever until they see that CPI number start to come in. So I think Thursday is a huge, huge day. And I think it begs the question of, do we have an upside surprise in the market if, in fact, we see softer CPI?
But that's a pretty binary outcome, though, Quint, because the opposite could be true. It's like betting on the Raiders or the Chiefs. If the number comes in hotter, then wouldn't stocks tank?
No question, but I think we have to use some common sense. And the best way to look at this is if you were to look at the month-over-month CPI going back the last year. And it's sort of like a moving average in a rudimentary way. I mean, it's not that simple, but really you can boil it down to this. September of last year, we saw a 0.4% increase in the month-over-month number. That's effectively going to drop off. So if we are flat, as I would suspect that we're at minimum flat and potentially down on a month-over-month basis, that brings 8.3 down to 7.9. Now, in the month of September, everything on the input side was down. We don't know yet about the housing, meaning rents and so forth. But, heating oil or natural gas, oil, many of the input prices were down considerably in the month of September. So it wouldn't surprise me to see a month over month down. Then you go out one more month. Last October, we had a 0.9% print, which is also effectively going to drop off in a month from now. So I think people are underestimating how quickly this CPI can come down before the end of the year.
Yeah, fair enough. It might. I mean, but suddenly we'll be happy about 5% inflation, which would have been terrible before, but now it's going to be great. That's how people think. But here's the worry I have, Quint. We've gotten used to these markets either going up or going down, right? They bottomed out, now they're going to pop. What if Stanley Druckenmiller and Ray Dalio and those guys, billionaire hedge fund managers, who are saying stocks could do nothing for 5 years? What if they're right?
Yeah, I mean, the old adage rings true, right? It could be a stock picker's market, but the reality is, been in this game a long time, as you have. I mean, markets do go up, markets go down. But the reality is, as we sit here today, we are vastly stretched to the downside. I mean, you've mentioned the NASDAQ and the tech, but if you look at small caps, for instance, they're trading at valuations we haven't seen in decades. So the reality is that any hint of good news in the other direction, and I think we're going to see a tide shift considerably. Does that take us to new highs and ultimately advancement? Maybe not, but it might, soften the year-end blow if we can sort of see a bounce back into the end of the year.